Insurance Committee's Oversight hearing of the California Department of Insurance. This hearing is the 5th Assembly Insurance Committee Oversight hearing focused on the Insurance Commissioner's Sustainable Insurance Strategy. We're here to know if the SIS is working. We need the SIS to work, and our constituents need the SIS to work. And today, once again, we will receive an update from Insurance Commissioner Ricardo Lara. Again, Insurance Commissioner, I want to thank you so much. Every time we ask you to come, you do, and these updates really help us. We're looking forward to hearing more about the impacts of the SIS on California's insurance market. Members, we will take questions following the Commissioner's testimony, and without further delay, Commissioner Lara, would you like to begin?
Great, thank you. Thank you, Madam Chair and Mr. Vice Chair, for inviting me to be here today to provide important updates on our sustainable insurance strategy. As you mentioned, this is my 5th time testifying before the committee since I introduced our sustainable insurance strategy more than a year ago. I appreciate the continued partnership that I have with you, Madam Chair, and our great Vice Chair, and with many of the committee members present today as we all work to address our state's homeowners and commercial insurance crisis. Our ongoing partnership is critical to consumer protection and making it important for you to understand my priorities and our approaches at the Department of Insurance. I literally just landed and the allergies started. It's Sacramento welcoming me back, I guess. As Commissioner, I have grounded our work in a clear set of responsibilities in the following order. 1, to protect people of California who rely on insurance to protect their lives, livelihoods, and their investments. To the staff who carry out the department's mission to protect consumers. To the communities we serve, especially those historically marginalized or disproportionately impacted by catastrophes and natural catastrophes. And to the long-term integrities of California's insurance marketplace, which includes consumers, homeowners, small businesses, nonprofits, corporations, and of course, the industry. My department has made tremendous strides in these past several months in implementing our strategy. Some groups, namely, I will just say, and I'm going to start pulling punches immediately, Consumer Watchdog, along with those in the insurance lobby, have carved out power in a decades-old system that rewards gridlock, where being loud has often mattered more than actually being effective. These groups have played off by old rules, arguing against reforms, while the market is crumbling beneath us. Watchdog continues to collect millions of dollars in fees without any accountability or public scrutiny. These fees are paid by insurance companies and, of course, passed on to the consumer in their rates, again, adding to already an unaffordable policy for so many Californians throughout the state. And, of course, we've seen that many Californians continue to be left without coverage. These claims, Watchdog claims to speak for consumers, but their own records publicly show they have no members and only serve themselves. They grandstand, but don't offer any meaningful solutions. To me, that's not leadership. That's the politics of delay. And my department and I are confronting it head on, as you will hear more in detail today. Our mission is simple. Consumers must have real choices, and our goal is to rebuild a sustainable, competitive insurance market where insurance companies want to do business and not leave the state. An insurance market where Californians can protect the homes and lives they have worked so hard to build and invested in. So for the past 30 years under Prop 103, the insurance companies have zero legal requirement or regulatory obligation, none whatsoever, to write policies in wildfire distressed areas. Those are the current rules. This system we know isn't working, and it hasn't been working for decades. That is why we are building a new path forward. We just can't talk about affordability without first addressing availability. You've heard me say that oftentimes. You can't afford what doesn't exist. It's unrealistic and dishonest to promise that prices will go down overnight. But we are building an entirely new system where people can pay for coverage that they can actually get, not just be pushed onto the FAIR plan with higher premiums and limited protections. And again, here's the bottom line, members. Under the last 30 years, under Prop 103, rates have risen every single year. and insurance prices may continue to rise, but they will be nowhere near the cost of being uninsurable or self-insured. Just talk to the thousands of Californians who currently cannot find coverage, or of losing their home, or of losing your valued possessions, or of losing your community. Prop 103 requires public inspection of all department rate filings. We did not sidestep this requirement. Litigation would have only delayed this relief for Californians that they need. And as we completed these reforms last December, we immediately turned to our successful implementation of these reforms. And as a large regulatory department, we must get the implementation right, because that's where we succeed or we fail. And here are the reforms that we are currently implementing in our sustainable insurance strategy. New catastrophe model tools that reward risk mitigation, home hardening, and resilience. We're streamlined the rate filing reviews with more accountability and more transparency. We're using forward-looking data that rewards our wealth safety actions and the thousands, if not millions of dollars that you all have invested in your budget to actually work on mitigation. Finally, going to take that into consideration. Modernization of our FAIR plan so it doesn't keep growing as a shadow system and drag our entire market down. So we're not just rebuilding an insurance market, we have to rebuild trust. We are working to ensure that no customer is left behind because of their zip code, the roof type that they might have, or where they live. My department is now moving with unprecedented speed and focus to implement the various regulations and administrative actions of our strategy and monitor the response in the California insurance market. It's imperative that we do this simultaneously, not only implement our reforms, but look at how the market is actually responding so that we are able to maneuver if we have to. If we're seeing that certain insurance companies are still not entering certain parts, we need to be able to address that. More importantly, we'll have the tools to actually see that now for the very first time. And last December, I fulfilled my commitment to finalizing our state's largest reform in 30 years. Again, we achieved this ambitious goal within a one-year timeline, creating entirely new laws and procedures from the ground up in record time while remaining thorough, thoughtful, and deliberate. Because we are not standing still, we are moving forward, and for the first time in decades, insurance companies are responding not to fear, but to a clear, actual strategy. And Californians are already seeing the results. We've approved homeowner rate filings, sometimes in multiple filings, for every top 10 homeowners insurance with strict scrutiny. We have brought the average time to review these rate filings down from 281 days to 71 days. And that's less than in 2023. In quarter one of this year, we approved 17 homeowner filings and had 23 pending. This data now is posted on our website because as part of our strategy, we also have to hold ourselves accountable and have that information available for the public. So because of our work, Farmers Company has reopened several of its coverage lines and has kept its homeowners and new business line open for the past several years. CSAA, AAA, USAA, and Mercury, they are all staying in our state and growing. Allstate says they will return to the market once our strategy is fully completed. So now looking forward, we are expecting insurers to start submitting their CIS filings in the next few weeks. These new filings will also include insurers' commitments for the first time ever to expand new writing in our state, especially in wildfire distress areas, as we've already previously defined in other briefings. My staff has worked tremendously hard over these past 6 months, and we are now in the final phase of publicly reviewing several wildfire catastrophe models. Our filing instructions are now complete for insurers to include their net cost of reinsurance in their rate applications, and this information, again, is publicly posted on our website. So I want to thank the legislature for continuing to approve our budget expenditure authority, for me to get the necessary contracts in place to help my department's actuaries, analysts, and lawyers with the resources they need to review these files. As insurance companies start writing new policies towards that fulfillment of their rate filing commitments, we will be closely monitoring and publicly posting progress on our website. So again, everybody knows how the market is responding to these reforms. And just as of yesterday, the FAIR Plan now is publicly releasing its policy counts. This is an important step forward as we continue to make the FAIR Plan more transparent, and we may come to you with legislative proposals to make even more transparency measures within the FAIR Plan and make them actually durable. And we will be tracking the FAIR Plan's trends as a slowing or reversal of the FAIR Plan growth. And that's going to be the most important signal in increased insurance availability across the state. Again, if we're seeing the FAIR Plan diminish in size and scope in certain zip codes, and that insurance companies are entering back into these wildfire areas, we will now be able to track that and give you hopefully real-time information. So that's how we're going to measure progress. And I also announced, again, a formal investigation last month into State Farm's handling of thousands of insurance claims from wildfire survivors affected by Palisades and the Eaton wildfires. Californians deserve fair and comprehensive treatment from their insurance companies. No one should be left in uncertainty, forced to fight for what they are owed, or face endless delays that often lead consumers to give up. You've heard all those stories before, Madam Chair. A market conduct examination is one of my department's most effective tools, involving a thorough fact-based review that typically takes several months. The department is currently, again, and we took our time because we wanted to go from not just from hearsay, but from actual complaints submitted to our department. And we're also now at a different stage in the claims process for these fires. This allows us to be more comprehensive in our regulatory review for an examination of this magnitude and importance. We are seeing now insurers are making payment decisions, enabling the department to evaluate adjuster practices and thoroughly assess State Farm's methods across a wide range of claims handling. And this is why we take our time to make sure that we're at this step now of the process. Doing it any time earlier wouldn't have yielded any type of information, because at that time they were still just paying additional living expenses. We have to take our time to get to this part of the entire claims process. This examination will assess whether State Farm has complied, with California's consumer protection laws and claim handling laws, and will help determine if further reforms are needed as natural disasters increasingly disrupt insurance market, actually across our country. While there are no national standards for insurance claim handlings, they can be vague and inconsistently be applied, especially during large-scale climate disasters as the ones that we just experienced. I also want to take a second to thank Assemblymember John Harabedian for his partnership with me on this particular endeavor on the Eaton fire, and helping me flag trouble patterns that my market staff are now going to be investigating, such as the frequent reassignment of multiple adjusters with little continuity of communication, inconsistent management of similar claims, and inadequate record keeping or information sharing among claims teams, among multiple other complaints that we are investigating. I will not let any insurance company exploit this crisis or walk away from Californians who have paid their premiums and played by the rules. So let me give you some numbers of where we're at up to date. To date, we've helped more than 12,000 survivors with wildfire insurance questions and issues. We've recently posted on our department's website, as of last month, insurance companies have reported more than 38,000 claims filed, with more than 35,000 fully or partially claims paid, totaling more than $17 billion paid to consumers. One of the more than 38,000 claims filed to date, around 1,000 complaints have been directly filed with us on these claims, and we have been able to recover a little more than $60 million to date for Southern California wildfire survivors on these complaints alone. And we can expect this to only increase as the settlements are being reached on primary rebuild of total loss homes and businesses. Again, we're starting to see now these claims mature more. We're starting to have more of the price containments of what the home had during before the fire. So, but I also recognize there's more to do. We have launched a multi-state coalition to tackle underinsurance issues, something that was kept brought up by this committee. Together with New Mexico, Colorado, Oregon, and Washington, we are gathering data and building our understanding of insurance gaps and how to reduce the prevalence of policyholders being underinsured after severe fire, something that all these states and their consumers are experienced after their fires. This is one of the many ways we are partnering with other state regulators in Western states to strengthen our capacity to help Californians by empowering us to learn from our collective experience in the aftermath of major wildfires. Additionally, my department and I continue to encourage wildfire survivors that feel claims that are not being handled properly and quickly by their insurer to file a complaint with my department so that we can assist them directly and gather important consumer complaint data for stronger actions, if necessary, even to include in our ongoing market conduct examination. Again, this is important, so if consumers have a complaint, have them file that with our department. It's easier than for us trying to track down, hearsay or surveys or so forth. We need real complaints so that our lawyers and our analysts can actually look and start an investigation if we need to expand our market conduct exam. To give you an idea of what we are seeing on the ground in terms of the consumer complaints, they involve delays by adjusters in responding to claims and ultimately paying these wildfire claims. By far, most of the prevalent complaints, and it's not going to be a surprise to anybody, are smoke damage claims. So today we, as we all know, we are experiencing the aftermath, again, of the worst wildfires in California's history. One, it's unique because it's an urban fire that devastated entire neighborhoods and spread toxic soot and ash across a wide region. In the past, we've experienced massive fires, including in Santa Rosa and in Paradise, but we've responded with new insurance rules and laws to improve payment claims and cut red tape, including sponsoring many of those laws that are now laws that were championed by many of the folks in this room. But we have never experienced something of this magnitude across such an urban area. And what we're seeing is that over the past 30 years, there have been no common standards for paying smoke damage claims. The result of this is that people are forced to go back to homes that may or may not be safe. This is why we have to take actions to protect people now and for the future. So we recognize that smoke damage is a serious growing concern for many Californians. I ordered insurers to fully investigate and pay legitimate smoke claims in accordance with California law. I sent a letter to the FAIR Plan directing them to act just like every other insurance company and fully investigate and pay these claims and to the best practices. My team continues to demand accountability on that for the FAIR Plan. And I have to say, too, that the lack of consistent public health standards for smoke damage has led to a lot of confusion, delays, and uneven treatment for homeowners after these fires. And I also want to be very clear, this is not an insurance issue. This is a health and safety issue first and foremost, and needs to be led by experts to help us understand what a fully remediated home would look like. This is why, after months of trying to figure out who the experts are or what are some standards that are out there, even international standards, we couldn't find any. And this is why I decided to, take the bull by the horns and create our Smoke Claims and Remediation Task Force and my department. And we just announced its members yesterday, including actual consumer advocates, state and local public health experts, fire safety experts, smoke remediation specialists, industrial hygienists, and insurance representatives. The task force goal is to recommend where standards are needed and which agencies must be involved in creating and enforcing them. We expect that the task force complete its work in just a handful of months and bring recommendations back to me so that we can have real solutions. Again, stay tuned. Those might be possible laws that we might need to be drafting as well, because we cannot wait another 30 years of this delay. Californians deserve to return to their homes that are safe, not to be left in the dark or forced to clean up their own toxic smoke damage on their own. This is such a prevalent issue that we often hear consumers say that they have much rather have lost their home in a fire then have to deal with the smoke damage claims with their insurance companies. That is not right. And so we're going to look to change that. Several other states are looking at other ways of trying to come up with standards. Colorado passed a study bill. As far as I'm concerned, that we know, there's still no funding by the legislature to pay for that. So we just went ahead and created a task force, give us recommendations. We're going to give you a couple months, come back to us, and then we'll engage the legislature if we feel we need to do either new laws or if we could do this regulatory or what other agencies can do regulatory reforms so that we have finally some smoke remediation standards that could quite frankly be a model for the rest of the world and for the nation, since none of those exist. On another note, more than 3 decades ago, Prop 103 established a role for public participants known as interveners to represent consumers' interests in the department proceedings. In my opinion, that's the job of the men and women of the Department of Insurance. These interveners may participate in the department's pending rate applications and rulemakings and are eligible to receive compensation if they have made substantial contribution to these proceedings and presented relevant issues, evidence, and arguments that are independent from those raised by the department staff. For decades, any payment of compensation to these groups is made by insurance companies and ultimately passed on to consumers through rate increases or fees on policyholders' premiums. We are the only state in the nation that has this process. The intervener process has not been comprehensively reviewed in over 30 years. That's until now. My department has been re-examining the entire framework as part of our sustainable insurance strategy, our broader effort to modernize and increase accountability for every stage and every participant in the rate filing process, because every dollar costs the consumer that much more for their policy. Over the last 10 years, the department has awarded nearly $10 million in compensation to interveners, with primarily one intervener group receiving nearly all of this compensation. Closer examinations of this intervener process has revealed several concerns so far. In many instances, interveners raise issues that are not relevant or even duplicative of my department's own staff review. These actions do little to contribute to the resolution of these pending rate filings and, in fact, can help exacerbate the challenges that we have in seeing our states, that we're seeing in our state's insurance market. Going forward, my department will no longer grant intervener petitions that raise issues unrelated to the actual rate application, going back to the letter of the law of Prop 103. Moreover, compensation will not be awarded unless the intervener can clearly demonstrate a substantial contribution to that proceeding, consistent again with the letter and the spirit under which this process was established under Prop 103. Regulatory reform is needed to improve transparency, reporting, and oversight in this area. At the same time, the department must also be accountable. For example, I was made aware that the department's Independent Administrative Hearing Bureau had failed to timely review and issue proposed decisions in approximately 25 pending intervener compensation petitions. Again, this backlog is unacceptable. If interveners fulfill that responsibility and contribute meaningfully to the department's process under the law, they should not be left waiting years for payment. This also discourages other interveners or other consumer groups to participate in the intervener process, many of them who are not going to be able to wait years to get payment. To address this issue in December 2024, I reassumed authority over the review of these petitions. As the twice elected head of the California Department of Insurance, I am pleased to report that all of the outstanding petitions will be resolved by the end of this month. Under my strategy, I have prioritized accountability for all parties. As I told you, Madam Chair and Mr. Vice Chair, all parties. That includes insurers, interveners, and my own department. Everyone involved must adhere to the timelines and responsibilities defined in the statutes by the regulation. This means everyone, including the insurance companies run FAIR Plan. For decades, the FAIR Plan has functioned as the insurer of last resort for many Californians. However, its expansion has revealed deep flaws in a system that has never designed to bear the weight it now carries today. Under Prop 103, to bypass high-risk areas, insurance companies have left a growing number of homeowners and business owners with no option but costly limited fair plan coverage. That's going to end now. My top priority is for people to have more choices in a competitive market, and for those unable to find coverage right now, that the fair plan needs to provide full services and benefit payouts that consumers deserve quickly and fully. I have also increased the fair plan transparency by using my executive authority. Effective yesterday, the fair plan is sharing information with policymakers and the public about its current condition and size. Remember, right after the fire, everybody was wondering if the fair plan was going to implode. Even the two ladies in front of me at the grocery store. And I'm like, do you have information that I don't have? And so this is finally important to note that we need to have public transparency for the fair plan. Other states that have recently created their own fair plans are much more transparent than ours that was established in the 60s. We need to change that. This is real-time data that is critical as we work to get people out of the fair plan and back to regular market. My department is currently investigating fair plan's handling of smoke damage claims from the Los Angeles and previous wildfires, again, to resolve consumers' ongoing complaints and help people get back on their feet and recover as quickly as possible. And finally, I'm creating greater stability to support our market expansion despite opposition of these insane entrenched interests to benefit from this broken system. Insurance companies are pulling back from our market over fear of an expanding fair plan, which Bloomberg News called the hidden crisis. Last year, I acted to stabilize the market conditions with an executive action, bringing clarity in the situation of a worst-case scenario where the fair plan does not have the resources to pay all its claims. We've just had that worst-case scenario in Los Angeles. And last week, my department asked the judge to reject a lawsuit that does nothing to address the state's insurance crisis. This lawsuit, the latest filed by Watchdog, only hurts homeowners, small businesses, and nonprofits who need access to insurance options. These are the forces of delay and distraction that have caused this crisis, and I need your continued support to finish this job. Again, we're proud to support AB 226 that's going to give the fair plan access to more credit and more financial tools that they need to stay strong. And in the incoming weeks, my staff's expected to file the department's ongoing financial examination of the fair plan, including its compliance with my department's 2022 operational assessment report. We called for significant changes in the fair plan's governance, operations, underwriting, claims handling, risk management, consumer services, and financial planning strategies and policies. So we look forward to sharing that with all of you when it becomes final. And in closing, again, we need bold, lasting reform and the political courage to stick with it because it is the right thing to do regardless of all the political attacks, all the nuanced investigations. This is all tactics to slow the work of the department. Do not be fooled. But we are ready, and we have been ready, and we're ready to meet this moment. Again, we owe it to every firefighter who defended a neighborhood, every senior who wants to retire in peace, every family who dreams of owning a home. We are building a modern insurance market for them. This will be, again, the hardest work that I do as California Insurance Commissioner, but it's also, I think, going to be the most meaningful and the most impactful moving forward. I appreciate your time and look forward to your questions.
Thank you so much. That was a lot. We always appreciate you being here. So before I turn it over to my colleagues, I wanted to ask, can you tell us how intervener compensation is determined?
So the intervener compensation is usually it happens to the biggest companies because that's where the intervener can get most of the money. They come in. Previous to my administration, they could come in, intervene, you literally cut and paste some of our own issues that we have with the file that we're working on, and then delay the entire process until they were ready to negotiate. That's unacceptable because then by the time that rate is actually approved, it no longer meets the risk that it's intended to cover. And that's why you see such backlog in these rate files. We've cut those down. We've been very aggressive just sticking to the letter of the law with Prop 103 that says if you're ready to intervene, you're ready to intervene day one. We're not going to allow you to, stymie this process because we're in a crisis. We don't have the luxury of waiting. And again, we're saying you can't, but with these reforms that we will be making public pretty soon, it's going to be a regulation that's going to be transparent, hold them more transparent, accountable, with clear guidelines of what it means to actually be part and be a meaningful participant in the rate files. Right now, it's so vague that anything could be considered intervening, and that only delays the process, which only ultimately hurts consumers. And if we're awarding taxpayer money to these interveners, they also should be held to those same transparent regulations and reforms that all of us have to do, and just as we do in our state budget, right? And so it's really bringing some controls that are long overdue in the intervener process.
In terms of how much the compensation, who decides that, or is there a
That
formula?
is determined by one of our independent judges, and now we are bringing that back and we're having our legal team review. So they send us pretty much a billing information, and we review it to see if it's consistent with their actual intervention and if they've had meaningful intervention through the process.
Thank
Before
you.
it was essentially just rubber stamped.
Okay, thank you.